All right, welcome back to our next installment here. Took a little break and we're back. So we're picking up here about, a half hour after the last video or so, maybe not quite that long. And yeah, so we had our rubber band trade there, as you remember, down at wave 10 on the longer term chart. Then we also, before that, on the hold on, just looking at this here real quick. Okay, so then we had our first cycle low after Dad turned up on the short term chart. You can't see that anymore. That's off the left side of the chart right now. Anyway, we've moved up a lot. This has been a definite winner. Then we had a first retrace in the trend on the short-term chart there at about 1209er. And a second retrace in the trend around 1223. And now we're at wave 5. Now you'll notice that we've got two resistance levels here that are right coming into about the same place. It's a cluster. YL, that's yesterday's low, and S1, that is support level 1 floor trader pivot. And we just didn't even stop. The market, you know, I talked about hesitating at resistance levels. It didn't even hesitate. It just sliced right through there. But one of the dynamics you'll often see when that happens is that it comes back. And the market still knows those levels are there, believe me, especially yesterday's low. Everybody in this parakeet knows yesterday's low. So they have that on their chart. So quite often when the market slices through like this, what I'll do is I'll lock in profits right there because I'm 99, well, not maybe that sure, but 87.32% sure the market's going to come back and acknowledge those levels. And we'll see if it does here right now. But yeah, that's the norm. And again, we're trading the norm. Always very important. Remember, we're trading the rules, not the exception to the rules. And so we'll see. So as you can see, we're trying to put in a cycle low here. We're kind of cycle indicators flipping around up and down, up and down. Again, don't take anything there seriously. Intra-bar, that's not going to be very helpful. Can and does change with every tick that comes through the market. So, yes. And then what's also interesting is, if you remember too, we took a retrace, see, this is what happened when I'm trying to trade and think at the same time and talk. See what's in, well, let me finish this thought. So anyway, if you remember, we had a reversal trade off of a wave 9 on the long-term chart, and now we're to wave 11. So technically, we made some good money on that trade, but it didn't really work. It didn't work in the sense of that was not the final high of the trend. Then we came way the heck down, but put in a wave 10. It turned into a rubber band trade to the upside. And now we're in a wave 11. So that's what we call in top dog trading a failed trade that makes money. And that actually made a lot of money. So those are cool. We like them. We'll take them. And yeah, the trades don't have to work out perfectly based on the philosophy or the theory of the trade in order for you to make money with it. All right. But the other thing I wanted to say here is, the other problem with that is, hold on again, I'm looking at something here. Okay, so the other problem with if you're going to stay in a trend for more than 5 waves, that's what I wanted to say. So if we said, well, yeah, we're going to stay into a trend for 7 waves, 9 waves, and here it got to 11. So you could have a regret. You could say, oh my gosh, I could have gotten 11 waves out of this instead of just 5. But the problem is that quite often before it gets to a really extended trend like 11 waves, it does have major drawdowns, major retraces. And that's pretty hard to stay through and really just stupid. It's not worth it because the win-loss ratio is low, and then you're holding as the market goes against you, so your P&L is going down. And it's just really a freaking nightmare mentally and statistically and everythingly. So, I don't do that. And on the other side of it, we made money. So even though it went up and made a higher high after wave 9, we made money anyway. We made money anyway without having to suffer through the major drawdowns. Okay, now we've got concurrent cycle highs on both time frames. You could actually take a short right there. And that is, again, a trend reversal trade based on the short-term chart. And it is, here we go again. I don't know what it is today with me and this cough. Okay, so we've got a second chance pattern on the longer term chart. Got 5-wave mom, 11-wave price trend, so really extended there. And then on the short term chart now, what we've got is a first cycle high after dad turns down. And it's true we didn't put in a wave 7 or 9. Normally in the reversal trades, we say we take a wave 7 or 9. Okay, so this is an important distinction. So we can take failed 7s and failed 9s. Those count. We can take those as reversal trades. Doesn't have to be a real 7 or a real 9. But the caveat is you can only try a reversal trade twice in a row. So let's say that you took a failed 7 and that one didn't work. And then you got a real wave 7 and then that trade didn't work. And then you put in, a wave 9. I would not take that short. So 2 strikes and we're out. That's it. Again, it's a money management principle. And yeah, that's all we're going to do. So just for pure, it's not just for pure money management. It's also the fact that if the market had 2 opportunities to reverse and didn't take it, then it's less likely to do it. In other words, the sentiment of the people trading the market is not really that bearish, is it, if that happened? So therefore, we're going to say, okay, if the market can't make up its mind after 2 tries, then we're going to just not take that side of the trade anymore. Wait for something new to set up. Wait for a new trade setup to occur. Notice how the market did come back down to S1 and yesterday's low, as I mentioned, even though it sliced right above them. Yep, came back down to acknowledge them and said, oh, we forgot about these levels. Let's go back and tickle them again. So we got that. So also we've got our support levels, the 15 EMA on the long term. We've got, we're still stuck here with yesterday's low and S1 is providing support. And we did go down and just barely touch that blue line on the short-term chart, which was the high of wave 3. And actually that high came in before wave 3. So wave 3 actually found a cycle high there because there was already a previous major high there from a previous point in the history of the chart. Alrighty, so this is where, again, we just let the market kind of slow down and wiggle around a little bit. Bids, asks, buys, sells, a little bit of this, a little bit of that. No point of indecision here, no problem. So we shorted the cycle high on a failed wave 7. And then we locked in a little bit of profits at the next cycle low. And now we're trying to put in a little cycle low, little cycle high. We'll see. Remains to be seen. But And then when you are bored, you just hum a little bit. So really nothing to do here. Also, we got a potential pinball pattern. I guess I could point that out there in the short-term chart, but not really anything too significant at this point. Just point it out to point it out since we're kind of in that zone or that area. How are we doing on time? Oh, we're over 10 minutes. Okay, so we better cut it off here and come on back.